It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? So I wanted to talk about ranges. Now, we've just spoken about breaker structures, so it's important we understand our ranges. Now, when I say ranges, I don't mean like the sideways correction that we've spoken about in other videos like market structures. So a range is pretty much where price is moving sideways. We're talking about sort of like adding it in with let's say point of interest, right? So I was just in the middle of doing this diagram, but I thought I'd start the video. So as you can see, right, price is moving bearish, right? We have a point of interest here, and price comes back and taps into it nicely. Okay. Now, if we were going to manage this position, what we would look for, I'd use the pencil actually. If we were going to manage this position, we was in this sell position, was in a sell, and we were targeting, down here, and our stops is above there. All right, the trader's running nicely, and we're looking to target the equal lows, right? If price, wicked below, right, that to a lot of people would be a breaker structure, so they'd look, to carry on holding the trade. But to us, if it wicked below and started to create new highs and lows, right, I'll draw it with this one, it's a bit better, and it closed back in and started to do this sort of formation, right, and it pulls back to break even. Now, what was originally, let's say a 5% trade in this case, now has come back to break even, and you're wondering why did that happen, right? And the truth is because you're not understanding your ranges. If you want to sell position here, and you want to you want to monitor this range, you want to monitor this trade, and you want to, know when to exit, you got to understand, the smaller time frame pullbacks. Okay, so if price on the 1 minute time frame, this is the way I manage it. It depends on obviously what time frame I entered the trade. So if I entered it on the 1 hour, I'd enter on the 1 minute time frame. But if I entered on the 4 hour, I'd go down to like the 15 minute, 30 minute, right? And just look for swing points, because if price starts making short term correction as we rejected away from this, sort of low, the minute I would close my trade is when we're probably broken above this high. Okay, this high here, because it's broken above this high, and it's also broken above this high, which is confirming the up move. So even though price may just pull back to a point of interest here, we still probably will get stopped out the trade. So once you start seeing those, pullbacks on the smaller time frame, that could be, a good indication to get out of the trade. And as we go back to, this other subject, you want to see here that adapt to new market changes. Now this is understanding ranges. So I said here, adapt to market crucial, blah blah blah. So price won't always pull back to our desired point of interest. So for that reason, it's important to adapt and react to the new given point of interest, right? And if you're wondering how we would find a new point of interest, it's all in the breaker structures and understand the range that you're currently in. It doesn't matter how you trade, but understanding that adapting to new market changes is important, right? So pretty much what the moral of the story is, as you can see, right, price has created a supply zone. Now this is a real life chart. I'm not sure what chart this was, but as you can see, price created a supply zone. Okay, price then tried to pull back but failed. We pulled back into this region, but we just failed, right? Then what happened is we created a new range, so we've entered a new range, we've broken structure. So the higher this range now would be here, and the lower this range obviously would be here, right? So this is here, and then obviously this is what happened. So it pretty much failed to react and tap into the open or the equilibrium of the supply zone. But because it's broken below the previous swing low, it's created a new range and entered a new range. Now we've got a new low here, and we've got a new high. If price continued higher and broken above the high, then we'd been, bullish structure and blah blah blah. Okay, but as you can see, because we've broken structure, this was the last up candle before the down move. So this is our new supply zone, right? Order block. So as you can see, price pulled back up into it and mitigated the open very nicely and sold off and broken structure and entered the new range again, right? Then what we could expect then is obviously a new point of interest in which price could pull back to. Okay, but what the moral of the story is that you need to understand what range you're in. Once price leaves, this range here, because we're looking for trade within this range, right? Once price leaves that range, we ain't no longer looking for trade within that certain range, because price has entered new range. Okay, so we'd be looking for an entry off the new range. Okay, so as you can see here, price tapped into this point of interest nicely. A respected supply zone, demand zone failed, bearish structure, right? We got a new point of interest here, but price failed to pull back. Okay, we just went below it. Then what happened is we entered a new range, so that previous point of interest is now invalid. Why is it invalid quickly? Because again, we've broken structure, we've entered a new range. This is our high, this is our now new low. So, you know, if I just draw it on a bit better, new high, new low. Okay, so now we want a new point of interest because we're in a different range. So say for example there's an order block here. What the price do? Pulled back into that point of interest and sold off. Okay, so this is why it's important to understand the ranges that you're in, simply because of the price. So if price continues to do this, alright, I just completely messed it up. Price continues to do this. Okay, and what it's doing here is a range. Right, we've got a high, got a low. Okay, got a high, got a low, got a high, got a low, got a high, got a low, got a high, got a low. So every time it's entering a new range. But when you are still in the same range, it's important to just try and monitor, try and get a trade from that up, the point of interest. So it's an order block there, but it's missed it, entered new range. Now invalid. However, we must understand that price has tapped into the region. If price didn't tap into the region and there's still an imbalance there, that still could be a point of interest, right? But if price has tapped slightly into the imbalance and it's slightly, gone, then that's the new range. So we'd no longer be, valid for that. But say, for example, there was an order block here, right? This is a valid one. Price mitigated it and broken structure. So we can continue to hold this trade, but if price stopped there and started reversing back and creating minor structures on a small time frame, that could be a good indication to get out the trade. Okay, but as you can see, price respected it, went upwards, pulled back, right? Say for example, there's a point of interest there, but it didn't pull back to it, right? Because it just didn't. That would probably still be a valid, point of interest. Why? Because there's still imbalance there. There's still liquidity here, right? But that's up to you. Okay, that's up to you to decide. It's like going over the breaker structures again. It's up to you to decide which breaker structures you want to do, use, right? So when you understand your ranges, it's up to you how you want to understand your ranges. Okay, no one else. I personally, if there's still an imbalance and there's still an order block there, I'm still attracted to that as being my still new point of interest. But if price breaks structure, it's broken above this, didn't pull back, and then it's broken above this, didn't pull back, and it's broken above this, then that's probably going to be invalid because we're just miles ahead now at this point, right? But it's just understand your ranges, and once we're in, still in the same range. So for example, this here is a range. As long as we're staying within this range, we're still in that range. But the minute price leaves, that's when obviously when our new point of interest will change. So say for example we had a order block up here, right? Blah blah blah, price broken structure, valid order block. This is our high, this is our low. Okay, if price pulls back and taps into the order block, great. It's within the same range, it hasn't broken below, so we're going to take the trade. However, if price breaks below, we're going to have a new point of interest. Okay, if there's an order block there, we'll target that one and sell. Right. However, if there's still a big imbalance there, price hasn't broken above the previous high or anything, there's not much movement, right? Still imbalanced, still an order block, then that could still be valid. But that's up to, again, for you to decide on how you want to validate your ranges. People use 2 breaker structures, people use 3 breaker structures, or people just use 1 breaker structure. And when I say breaker structure, I mean point of invalidation. So price broken this 1 structure here, right? All it takes is 1 breaker structure and that's invalid. Entered new range, right? 1 break structure, new range, whatever, right? People do like that. People use 2 range breaks, right? Which I'd say I'm more of onto the 2 breaks. So prices broken structure, slightly pulled back into the this order block, right? Respected it, broken new structure, so that would become invalid, and then look to mitigate a new one. So around here somewhere, for example, if price didn't pull back into this order block, right? But you get the idea. And that happens all the time, literally like whatever time frame you're on. You can see a good example here. So for example, this is the low, this is the low, this is the low, this is the high, this is the high, this is the high. Okay, so as you can see, price didn't pull back all the way into this sort of supply zone. However, it tapped into this imbalance. Okay, so it grabbed some liquidity and created a new range. Why are we in a new range? Because we've broken structure. Okay, I mean now in this structure, so we've got a new low, we got a new high. So what we're looking for now as we're still in the same range, right? This could be, you know, we can't tell this is a high because price hasn't stopped falling yet. But if as long as we're staying within this range, right, we still got a low here. So if price doesn't break below or break above, then we're still within this range. So what could potentially happen here on your yen is price could tap into this order block, right, and then sell, and then that's would be in the new range, and again in the order block. Okay, and this will continue to happen. So it's just important to understand your points of interest and, you know, just be realistic about it. And I'd say it's mainly for the lower time frames, but it's just good to mark them up on the high time frames. So for example, you've got your daily lows, right? So you can go ahead and mark all them up. So we just delete that for now. So what you can do when you come to do your top-down analysis, you'll often find on my charts, especially when I do those markups on Discord, right? You'll often find my highs and lows within a certain time frame marked up, right? So I know that this, as long as we're still trading within this range, we're going to be looking for whether it's buys or sells. But then this is where the, you know, the confluences come in. Are we selling at a premium? Why are we going to be selling, or are we going to be buying? Are we going to be selling in this case? Of course we are going to be selling. Why? Because we got a high, right? We got these lows here, which is all taken out in one big bearish move, right? Broken structure, right? Tapping into these lows. Okay, so right now price is bearish. I mean, it could be tapping into an order block here for price to continue higher and break it above, but we can't say that because we need to respect structure, because structure is structure, right? So yeah, pretty much we need to just mark up the daily highs and lows, mark up the 4-hour highs and lows, because if we go to the 4-hour, you know, we've still got the daily highs and lows, but we now have 4-hour highs and lows, right? And then we go to the 1 hourly or the 15-minute, right? 1 hourly is fine. We got a 1 hourly low, okay? We got a 1 hourly high. So, you know, just draw all these on, and it'll all start to make sense, and it just helps you understand what ranges you're in. So if you have a different color for, if you have like this light blue color for your H1, then you have like a red for your 4-hour, and then for the daily you have, let's go black, right? You can leave notes on them as well, so you can add in some text here, right, and have them in the middle or the right, and it just helps you understand that, you know, if price, you know, if we're on the small time frames, we ain't going to be able to see, you know, what's above. So when, you know, pretty much from this 4-hour high, this daily high, it's all clean traffic. So if we wanted to take a buy position, as long as we break above these highs, it's all pretty much clean traffic. So we could buy up to this, you know, sort of supply zone up here and then sell. Okay, so it's just about, you know, once we leave this range, we've entered a new range, right? But again, we need to be respecting the higher time frame structure. And once price taps into that higher time frame point of interest, that's when we can go down to the 1 minute time frame and look for an entry, right? But yeah, understand your ranges, guys. Just go on a chart, go on a 4-hour chart, you know. So just do this, right? So as you can see, we got all these ranges here, you know. So you can literally just go on all day and mark them up, and they're very easy to find. Then it's up to you to just, you know, decide which ones are good for you and which ones are not, right? So yeah, just understand the ranges, guys, and that's all you got to do. And just remember, it's up to you, trial and error, you know. So yeah, I hope you guys enjoyed the video. I hope you learned something new. All I recommend you to do now is just go on the charts and start drawing out your ranges, right? And send them to the Discord as well, guys. Okay. So other than that, I'll catch you guys later on a different video. Thank you for watching.